The TSX declined alongside its American counterparts today during what has been largely a global sell-off in risk assets driven by tensions among NATO allies regarding Greenland. My next guest says there's some buying opportunity in the Canadian market. Let's go to Jeffrey Tory. He's a portfolio manager at Pembroke Management. Jeffrey, thanks for joining us today.
Nice to be here with you again, Marilla. How are you?
I'm good, thank you. Are
Great.
we in for more days like today with the Trump administration's agenda?
Well, I think if you saw in the sort of global financial press today, there was the revisiting of this theme of Sell America, and I think some investors probably have a little PTSD about what happened last April when all of the tariff sort of tantrums started, and you had a great year in the stock markets last year, uncertainty today, and so I think weekends when the news flow starts to reverse like it did today, and certainly when you follow the news flow, it's a pretty scary time when you have the standing president of the United States putting the American flag over all of North America. It's a bit disquieting, let's say, because as a couple of articles indicated today, I think Carney spoke when he was in Davos, the world order is changing for sure. Yeah,
that was a post Donald Trump put out today where he once again put the American flag over Canada, which is something he threatened, of course, last year for sovereignty. Let's talk about gold for a moment. Gold gains because of all of the uncertainty and people are unsure of what's to come. They want those assets. What do you see for metals this year on the TSX?
So we're not gold bugs here, but we understand the role of gold in investors' portfolios as a great diversifier, and obviously in the last two or 3 years, the metal has done amazingly well, and then in the last year or so, the stocks did well as operating leverage kicked in, and so the way we see gold is very hard to model what the price should be, but if you think of the role of gold as a hedge against constant debasement of currency, against uncertainty, store of value. There's a shortage of the physical metal, and over the last couple of years, central banks have been buying. It puts a very interesting floor under gold, and I think whatever your sentiment about it might be, I think gold is doing what it should do right now, which is in a time of uncertainty, it's sort of like a safe haven for investors. So I see it has a great role in a retail investor's diversified portfolio. Just don't speculate in it.
All right. We've seen the market broadening out. That started later in 2025. Mostly that is positive. Where do you think it still needs to broaden out further?
Well, if you're leading me to, our views certainly on Canada, and we also have significant exposure in the U.S., is the market was very concentrated in 2025 in the U.S. in particular, where most of the gains or a majority of the gains of the S&P came from the what they call the Mag 7. The small cap stocks did okay last year, but not great. But the earnings growth in the sector is still quite good. So this year, you've actually seen some broadening out in the United States. In Canada, the indexes were dominated last year by the mining and gold trade. But our view is, despite the success of the non-resource small cap sector in Canada last year, that there's lots of value. I'm people who know me know that I'm a bull on Canada. I'm a bull from a macro standpoint because we're a great country. We have great education system, and we have lots of opportunity of where to invest, assuming we want to exploit our natural advantages. But there's a ton of Canadian companies that are doing well that just aren't getting recognition in the public market.
Okay, let's get to tech for just a moment, because we know a lot of investors threw out software companies last year on concerns about AI. Would you invest in some of these software companies now? Are there opportunities to be had?
So I think, yeah, and the answer is yes. The sort of drawdown last year in the software companies was fairly significant, Constellation being sort of the poster child, and again, for those who don't follow them actively, there's this fear that that AI will reduce the need for sort of sophisticated coding, make it easier. If you look at the long-term track record of Constellation as a capital allocator, it's amazing, and the stock is obviously much cheaper today than it was last year. and yet the opportunity set in terms of what Constellation can buy is probably bigger than ever. The example that I wanted to cite for the audience today, which is a smaller company that Pembroke owns and follows, is a company called VHI, which is very active in the healthcare software space for governments and government agencies. It also has had a bit of a wild ride. And I was just looking at the data before coming on the call. It's now trading at less than 10 times 2027 EBITDA. It's cashed up and has a very large runway in terms of acquisition opportunities over the next 2 or 3 years. And I think one of the things for listeners to understand is that ripping out mission critical software is not as simple as people think. And so I think what you have to do when you look at the resiliency of software companies is to buy the stocks of the companies where there would be incredible business risk in replacing that software by something new and unproven. It's some entrepreneur in a garage who's writing new code. I think that you want to understand that incumbency is quite powerful, and that a lot of these organizations are fairly hidebound, and they wouldn't take the risk of throwing out something that works. And so that certainly is the case for VHI. Constellation is more of a collection of different types of software, but it very much applies where there's business risk in making the change.
Jeffrey Tory, I got to leave it there, sir. But thank you for your time. Jeffrey Tory, Portfolio Manager, Pembroke Management.